Hi there, I'm Champion Trader Kevin Davey, and today I'm going to give you an algo entry that actually works. So let's get started. Before we get started, if you're not on my free email list for algo trading information, well, you should be. Just hit the QR code, type in the address you see on the screen, and you'll get signed up and you'll get this free mini S&P algo strategy. So in this video, I'm going to give you an entry that actually works on a bunch of different markets. I'm going to show you exactly where it works, and there's not going to be any sales pitches here. So sit back, relax, and get ready to see this entry. But first, I want to explain how most people create strategies, because what most people do is incorrect. And if you start out with a bad process, you're never going to find good entries. Okay? So most people take their entries, their exits, their rules, they put it with all their historical data, they put it in the optimization engine of their trading platform, whether it's TradeStation or Multicharts or NinjaTrader or whatever. They run thousands of iterations, get the best parameters, and then they say, oh, well, those are the best parameters. I'm going to use those and start trading live. If that's what you do, don't do it. That is the biggest mistake you can make in strategy development, is trying to over-optimize and use optimization in the wrong way. So a lot of people are doing it where they think the more iterations, the better. This example, there's 154 million iterations. I don't even know how long that would take, but I can tell you the results you got out of it would be useless. Okay? Don't go looking for the best. That's just going to give you problems all the time. So don't do that. The process I use, I call the Strategy Factory, and it walks you through the whole process of developing a strategy properly. Yes, you use optimization, but you don't do too much. So whatever you do when you're building strategies, you should have a set process, one that you know works. And this is one example of something that works. Okay, so let's talk about entries. You know, you've probably seen these magic entries that people show where they'll show you a couple trades of how great this particular entry was. I'm not going to show you that. I'm going to tell you specific markets, bar sizes, and input ranges where this entry works. Okay? So, obviously, I test a lot of entries. I do a lot of this as part of just my ongoing strategy development. And for this particular video, what I did was I just put the entries themselves. So there's no stop loss, there's no profit target, there's no exits to get in the way. All the signals are generated by the entries themselves. And I tested it on a whole bunch of different futures markets, because that's what I trade primarily. So I did 44 different futures markets. I did 8 different bar sizes, going from small size bars up to daily bars. And I did it over a 5-year test. I didn't do it over all the data, but a 5-year test is significant enough where you get enough trades and enough market conditions where you can say, okay, this seems to work pretty well. Altogether, about 500,000, probably more back tests, so a lot of back testing here. And you might say, wow, you know, it takes a while to run a back test and set up a chart and do all that. How'd you do it? Well, if you like what you see so far, you're going to love my free algo strategy and more trading information. Just hit the QR code or type in the address you see, and you'll get signed up to my email list and get lots of free algo trading information. So I have a secret weapon. It's called multi-walk software. It works with TradeStation and only TradeStation. It cuts development time by at least 93%. It's a huge time saver, and it's something that students who are with my course actually get for free. But it's a great tool, and it's something you should think about using, or at least the concept of using, because unless you're a course student, you can't get this software. But you could use the idea, and you could always build your own. Okay, so back to these entries. It's not fully developed strategy. Okay, like I said, I didn't put any kind of exits in here. I just wanted to say, hey, you're either long or short, and let the entries decide if you're going to reverse. But they could be a good starting point. So where it fits in my process is it's really a modified version of what I call limited feasibility testing or preliminary testing. It's where you test it and just see if it has any merit. If it doesn't, you just throw the idea out. So the entry itself, what you want is you want long-term momentum. You want that to be up. You want the short term to be down. You want the ADX to indicate a trend. ADX is an indicator in case you don't know it. When all three of those things line up, you go long. Vice versa for the short. The ADX would still have to indicate a trend even if it was going short. So let's take a look at the rule in easy language. It should be pretty readable for you, but it's saying if the close is greater than the close 200 bars ago, and the ADX is above a certain threshold, and the current close is less than the close another variable number of bars ago, this would be a shorter term. So this might be 10. So it's saying, hey, if your 200 bar momentum's up, that's suggesting a longer term uptrend. Your ADX is saying, hey, we have a trend. And then your short term momentum is saying, hey, we have a pullback. So it's the short term momentum's down. This might be a good time to enter. Then you're going to buy at the next bar at market. And the exact opposite holds true for short. Okay, so pretty simple. I think you can pretty much understand it. Should be able to program it in whatever language you use. This is TradeStation code. And here's an example. You could kind of see, take a look at this buy signal. I don't show 200 bars here, but you can imagine that the 200 bars, ago looks, maybe it's over here. It's up, and then you can see that short-term momentum is down. The ADX is saying, hey, there's a trend, and that's a good time to buy. And sure enough, it was. Now note that the signal before said it was a good time to go short, and it really wasn't. So, it's not perfect. Okay, no entry ever is. So I tried different values of that look back, that short-term pullback, look back length. I tried two values of that ADX threshold. So altogether 38 iterations. I wanted to see over those ranges, I want to see profit in most cases. I don't want to see where you have to have a length of 11 and an ADX of 30, and that's the only case that gives you profit. Nothing else does. I want to see some robustness where a wide range of values gives you profit. Like I said, that's a robustness test. And that doesn't tell you you have a good entry. It just tells you this is pretty decent. It's probably worth testing further. So it's a first test. That's all it is. So let's look at the results for the last 5 years. And you can see, it's kind of hard to see here, but I have the markets listed where it did work and the bar size it did work. So if there's a 1 in this field, that meant it worked. So heating oil, it worked in 14, 40 minute, 7, 20 minute, 240, 180, 120, and 60. It didn't work in 30. Altogether, it worked in 6 of the 8 markets I tested. And you can see there's 40 different markets where it works somewhere. And it seems to work the best with 720 minute. Different entries will work with different bar sizes. That's pretty typical. And different entries will work with different markets. So some markets here, it only works one particular time frame, and it won't work any other bar size. That's kind of how it goes. But you can see it's a wide range of different markets, different bar sizes where this does work. So here's a strategy. This is soybean oil, 360 minutes. So I took that entry and then created a whole strategy with it, with some exits. I don't show them just in the interest of time for this video, but it just gives you an idea that, hey, you can create something that looks pretty good. Not perfect, but again, if you're going for perfection in the strategies you're creating, you're doing something wrong. Like I said, that's just a start. More testing is required. There's all kinds of tests that I run as part of my process just to see if that strategy will hold up. And very few entries will hold up. Most of them fail. And you've got to realize that. It's pretty hard to create an algo. It's not as simple as some people make it sound. So, entries are important. This is certainly one that I would test, try it out with some different exits, see what happens. But remember, what's really key is the process you use. It's not the entries necessarily themselves, although you want a good entry. It's how you put it all together, how you test it to make sure you don't curve fit, that you don't over-optimize, and do all those bad things that a lot of us probably do or have done. For me, certainly, I used to do a lot of bad things until I figured out how to do things right. Again, my process is called the Strategy Factory. If you are going to be algo trading, you need a process to develop strategies, and it has to be consistent. This is a good approach to use. All right, well, thanks for watching. I'm Kevin Davey. Have a great day.